Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, welcome to the July 19th edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, is produced by Paige Driscoll, and what we do here is break down the latest from the NDPSR report. This week, starting with butter. This butter number coming in at 244.31 represents a -3 to the CME 1 week average of 247.25. So -3, well below our expected 2-cent positive basis. The CME was actually up 6 to get to that 247.25 benchmark. You'll notice here on the NDPSR, prices slipping a penny and a half. So we had a big contraction in basis with that increase in the CME and actually losing value here on the NDPSR. One of the big factors seems to be the 45 loads that we traded at the CME last week. If you assume that 45 loads equates to 1.8 million pounds to the CME price minus freight, that would go a long way in explaining how you pull this butter value down. If you take our expected 3.5 million pounds and add that 1.8 that we traded at the CME, you are fairly close to this 5.1 million pound reported NDPSR volume level. However, that basis and that price will come in as a surprise to most. Moving on to the cheese complex. Let's start with blocks. This block number at 141.24 represents a +8 to the CME 1 week average of 133.35. And I can hear you out there, you're saying +8. That's great basis. And under normal circumstances, that would be the case. However, that 133.35 was the low week at the CME. We were down 6 and then up 4. So you would expect higher than normal basis on a short-lived low as we experienced at that 133.35 level. And when you consider that block basis has been running anywhere from 4 to 8 over in recent history, well above the historical 2-cent positive basis, this +8, considering it was a low week, it was a little bit of a disappointment. And actually, it was about a penny and a half under my estimate. So a relatively low price on the NDPSR for blocks, but at that discounted level, similar to butter, the manufacturer was able to move higher than normal volume. NDPSR volume coming in at 13 million pounds. That's well above our expected 12.5 million. So all in all, with a +8 positive basis and higher than expected volume, I guess you would have to call that a win for the manufacturer in blocks. Moving on to barrels, 143.27. That represents a +6.5 to the CME 2-week barrel average of 136.70. Now that 136.70 also represents the low 2-week average at the CME. So that's the low week benchmark for barrels. And even at the low week, the barrel only able to muster a positive 6.5 cent basis. So that's at the high end of our expected 4 to 6 historical barrel basis. However, considering it's the low week, you would expect prices to be a little bit north of that even still. And similar to blocks, this reported barrel value of 143.27, about a penny and a half under my expectations. So a disappointment. Part of the reason for that could be the 53 loads that we traded at the CME last week. That equates to 2.1 million pounds. So once again, open price transparency at the CME goes a long way in giving us an idea of what prices on the NDPSR are going to do. Those sales at the CME really pushed NDPSR values down. You'll notice that we're down more than 6 cents from the prior week's NDPSR barrel price. Even with all that weight traded at the CME, still about 1 million pounds over our expected 13.5 million pound NDPSR volume level. So it looks like there was a little bit of a pushback on the manufacturer on normally scheduled contracts, and once again, possibly end users went to the CME to backfill that volume. And I think this is probably the biggest story on this week's report. Whey, 26.16. That represents a plus 1.5 to the CME 1 week average of 24.65. But of course, when we're looking at Whey, we're always going back to this July 1st NDPSR benchmark of 29.06. So sales that occurred last week, of course, were based on the July 1 NDPSR price level. And the manufacturer had to discount almost a full 3 cents to move that product. We came in at 26.16, down 3 from the July 1st NDPSR benchmark of 29.06. The real story in Whey, however, as we've been trending lower for quite some time, is this volume. 9.4 million pounds. I mean, wow, just a massive amount of weight moved in 1 week on the NDPSR. So in Whey, you typically would assume that we trade 4.5 million pounds on contracts. And then last week, we traded 48 loads on the CME, which equates to 1.9 million pounds. So with that 1.9 million pounds at essentially CME minus freight, call it 1.9 million pounds at 22 cents, our expected 4.5 million pounds at the prior week's NDPSR of 29. It looks like there was still, in addition to all that weight moving, an additional 3 million pounds moved on what I would assume would be a flat price sale. And to get this 26 with, as I mentioned, the weight that traded at the 29 level and the weight that traded at the CME at the 22 level, it looks like that 3 million pounds on that flat price sale went in the 23 cent neighborhood. So a little bit of a premium to what traded at the CME last week. Big volume on Whey at a lower than expected level, I think, is the story on this week's report. And then lastly, Nonfat, 116.75. That's a big number. That is almost a plus 5 to the CME 1 week average of 111.95. So the losses that we're seeing at the CME are not quickly translating to values on the NDPSR. That 116.74 still an elevated level, and at that elevated level, the manufacturer was able to move almost 19 million pounds. So let's call it a big win for the manufacturer this week in non-fat. So this is week 3 of 5 of the July pricing cycle. Currently getting a July class 3 of 1373, July class 4 all the way up at 1820. If you carry current CME equivalents out through the entire August 4-week pricing cycle, currently getting August class 3 of 1490, and I'm just going to keep that August class 4 at 1820. We'll see what they have in store for us in the weeks to come. Until then, thanks so much. Thanks, Paige, and the entire EverAg Insights team for producing this episode. Bye-bye. This episode of Basis Loaded was produced in cooperation with EverAg. At EverAg, we partner with every corner of the agriculture industry, from dairy to livestock, crops, and agribusiness, to deliver intelligent supply chain and risk management solutions. We are EverAg, everything agriculture. Learn more at www.ever.ag/everything.